Tonight, CNN and Fortune.
He helped make the bull market run.
He's by far the most successful Treasury Secretary in decades and decades.
Now that Robert Rubin is leaving, will the bulls run away? Perhaps tonight, Sharon Collins on the departure of a treasured secretary.
He gave up a first-class seat with Delta Airlines management for this.
Everything's got to happen today, and if we lose a day or lose a week, we're really behind the curve on the emergency.
An executive who said so long to corporate perks and who got another kind of bonus working in disaster relief.
You don't really realize what you've got until you see people who don't have it.
Mr. Matthews goes to Albania.
It's America's newest craze, online investing. Fortunes can be made.
I've doubled my money since I started.
And lost.
I was in shock. It can't be right.
With the click of a mouse. James Satori takes stock of the online gold rush. These days, at least 25%, and some say as much as a third of U.S. retail stock trades are being done online. But millions of cyber-savvy new investors may not understand just how risky a game they're playing. So tonight, James Satori looks at the profits and the perils of online investing.
How you feeling this morning?
A little better.
A little better? Let me just take a listen to you. Deep breath.
27-year-old Frontline Auster, a first-year resident at Brockton Hospital near Boston, may be the best connected doctor around.
I admit the patients and I manage the patients using a program on a laptop that helps the whole charting process.
During breaks, Auster also dials up the internet and manages his stock portfolio right from the doctor's break room.
How often do you check your stocks a day?
Maybe once or twice, like around noon or something around lunchtime. Then maybe sometime in the afternoon.
Contempo I wanted to check out.
At home, Auster invests with his fiancée, Rosemary Connolly. Together, they prowl for investment leads.
It's Contempo spelled like that?
Yeah.
Rosemary, who works as a Marilyn Monroe impersonator and even has her own website, makes her own online investments.
Look at how they expanded in all the malls now.
I think they're overextended.
Well, they did it really quickly.
They have a lot of stores.
They're only investing money they can afford to risk, around $12,000.
And how well have you done?
I've doubled my money since I started with it, about a year and a half ago.
Brian and Rosemary are part of the stampede of investors buying on the internet, the majority of whom are male, under 40, with an above-average income.
How popular has online investing become in terms of numbers of people involved?
Well, it's actually the most popular financial services product introduction in the history of the business.
Julio Gomez is a consultant to online brokerages.
We've gone from a standing start of 0 to now over 7.5 million online brokerage accounts in just 4 years.
That's 7.5 million compared to a total of 80 million stock accounts in the U.S.
36 and 9/16.
But studies show investors who trade online are more aggressive, making an average of 20 trades a year. That new wave of activity is propelling the low overhead online brokerage industry and, to a degree, the U.S. economy itself.
You can't do what this country needs to do in the next century without what online investors are doing right now, which is driving up the price of these stocks based on the value that they see in them. They're making it possible for tons of capital to enter into the market to finance the growth of the internet.
Okay.
Brian is one of those aggressive investors.
Intel's right now trading at just under $112 a share.
He's put most of his money into the internet, stocks like Yahoo, Netscape, and Intel.
You know what we can do? We can look up who owns this website.
He and Rosemary make 1 or 2 trades a day. They can afford to be active traders because online transactions are relatively cheap, as little as $5 to $10 per trade, compared to hundreds of dollars through a traditional broker.
Well, if I wasn't online, I wouldn't be able to make transactions at such a low commission and be able to take advantage of small fluctuations in stocks.
And if the 9-year bull market suddenly crashes,
I buy things that I'm only interested in keeping for the long term if I had to do that. So if I bought something and the market was to crash the next day, I would feel confident that what I owned was good and that I would hold it for a while.
Someone who shares that philosophy
Hi, Brian.
is Brian's mom, Marcia Auster.
Oh.
She and her husband, Mitchell, have used a stockbroker for years. But last October, Marcia followed in her son's financial footsteps.
Online investing, it seems, for you guys is a family thing.
Actually, it started with Brian. He was the one who got me excited about doing it. But some people do well with it. Some people lose some money, some people make some money. So you can invest in stocks.
Marcia, who works as a middle school counselor, is among a growing number of women taking the plunge into investing.
I bought AOL yesterday, so I want it to go up.
Like her son, she's taken to checking the market during breaks at work.
I have to look, yes. I have to check it out, right?
Marcia's portfolio is modest, a couple of $1,000s to start in stocks like Cisco, eBay, and Microsoft.
Did you worry about the little fluctuations?
No, because that's where you can get yourself crazy, because it's up and down all day long. You know, and it's up and down every day. It's like, what's it going to be? Because I'm thinking AOL's something that I want to hold on to. So what's it going to be like in a year or two from now? You know, not like every 5 minutes.
It should come as no surprise that investors using computers and the internet to execute trades are largely attracted to high-tech stocks, like those listed here on the NASDAQ exchange, which on average shot up nearly 40% last year. But as the popularity of online investing grows, so does the potential for problems and glitches. In fact, the Securities and Exchange Commission last year reported a 3-fold increase in online-related complaints.
I was in shock. It can't be right. This is a big mistake. There's just no way. This is America.
Eileen and Wayne Allen of Maple Valley, Washington, learned firsthand the perils of investing online.
We're not new to the stock market. We had, purchased stock in the past through a broker.
What does this show?
But they wanted to try it on their own, so they signed up with Ameritrade, at first making small purchases. Then Eileen went after one of the hottest and most volatile internet stocks, Amazon.com.
I picked Amazon because Amazon had just had a split, and the split took the stock down quite a ways where I saw that I could actually purchase it.
She got more than she bargained for.
I ordered 13 shares, and the price quoted was $186, and so I placed an order. And when I went back to check on it, it was 186 shares at $190 a share.
Eileen tried to cancel the order, but it was executed in just 42 seconds.
And when I phoned them, the representative that I talked to looked it up, and she says, they're yours. You ordered them. They're yours.
The Allens believe Ameritrade's webpage somehow transposed the number 186. So instead of 13 shares, she got 186 shares, more than $35,000 worth of stock, even though her account had just $2,500 in cash. Wayne Allen tried to tell Ameritrade it was an obvious mistake.
Look at her history. She buys 5 shares of this, 2 shares of that, 10 shares of that. The woman has never bought more than $500 of anything since she's been with you guys.
The Allens had to dip into their retirement funds to cover the trade. 13 days later, they sold the Amazon stock after the price plummeted by half. Their loss, nearly $17,000.
We've taken measures to give some precautions to our customers.
Joe Ricketts, chairman of Omaha-based Ameritrade, says it's impossible for numbers to become transposed on the website. He says the company's traders do have leeway to approve orders based on a customer's history, even if there isn't enough cash in the account. According to Ameritrade logs, that's what happened in the Allens case. Still, the company insists there was no mistake, that the order was executed fairly and accurately.
When we're wrong, we tell the customer we're sorry and we pay for it. When we're not wrong, the customer, in all fairness to our shareholders, as responsible managers, the customer has to pay for their own mistakes.
The Allens took their complaint to state and federal regulators, even consulted an attorney.
None of them is going to get you any relief. None of them. No one seems to have an answer as to why an error can be made but not corrected.
The Allens case is extreme. Most complaints about online investing result from brokerage systems overloading and breaking down. Customers say they've actually lost money because they couldn't buy or sell when they wanted to, when the market was hot. Some have even filed class action lawsuits to recoup their losses.
Things go wrong. Markets go up, markets go down. Technology doesn't always work.
Mark Beecham of the North American Securities Administration Association says the convenience of online trading is a double-edged sword.
Technology has been phenomenal. It's done great things. It's democratized information. It's reduced trading costs to unbelievable levels. But at the same time, you have to decide for yourself whether you're an investor who wants to shoulder that responsibility or whether you really rather do something else with your time.
For Eileen Allen, the decision was easy.
I will not invest online until all of the problems get resolved and it becomes a lot more secure for the consumer. I don't even want to go near it.
Last week, Securities and Exchange Commission Chairman Arthur Levitt blasted online brokers whose ad campaigns downplay the risks of investing and emphasize the chances of getting rich. Levitt says such commercials step over the line and border on irresponsibility.